Testing, testing. 1, 2, 3. All right. Good morning. Good morning. How are you guys all this morning? Have a good idea of what we're going to do today. Thought we'd have a little fun looking at weed stocks, marijuana. I have a friend who smokes a lot of marijuana, likes to trade weed stocks, and he has brought it to my attention that the weed stocks are shooting to the moon. It's time to buy some weed stocks. Now, I don't know why that would be happening. Usually the weed stocks only rally when they think that the markets are going to, or when the federal government's going to legalize weed. And I've not heard anything about that. Don't know why that would be happening, but they are. They're shooting off to the moon. So we're going to go over and look at the weed stocks. So stick with us. We're going to go do that in a little bit. First thing we like to do in the morning is we like to watch the morning bell. So we like to watch the indexes here in the futures market. And so we have the Dow in the upper right-hand corner. We have the S&P in the upper left-hand corner. In the bottom right corner, we have the NASDAQ. And then down in the bottom left corner, we have the Russell 2000. So these are the indexes as they are traded on the stock market. They're stock indexes, but they're traded in the futures market out of Chicago, for those of you who are not aware of that. We get new people every day. And so they like to be informed of what's going on here. Hey, what are all these things you're looking at? These are the futures markets. And there's no pattern day trading rules over here. So you can open up an account with a very small amount of money, as little as $2,000, believe it or not. And you can start trading in the futures market with no pattern day trading rules. And then you can trade these stock indexes. Of course, there's a lot of other things you can trade in the futures market. You don't have to just stick with the stock indexes. We like the stock indexes because they move a lot. Yesterday, we tried to trade Bitcoin, and Bitcoin was a bit lazy. So I thought we would have a good day yesterday, but we didn't. I think all the attention was over on Donald J. Trump and his new offering, his new stock. And so there's a lot of trading going on there. I actually went and traded that after this class and made some money trading old Donald J. Trump. So market moved for me, and I picked up a nice little trade there. That was a lot of fun. And but these are some of the things you can trade over here in the futures market besides the indexes. You know, we've got all the currencies. So you got British pound and Canadian dollar and Aussie dollar and all kinds of fun things, euro, Japanese yen, the Nikkei's over here. We got all kinds of fun things that you can trade. We've also got all the metals. You got gold, silver, platinum, palladium. We've also got, there's euro dollar in here. We've also got natural gas and crude oil, unleaded gasoline. We got all kinds of fun things. There's soybean meal. We got the grains like wheat and corn. We've also got T-bonds and T-notes and all kinds of fun stuff. You can come over here and trade if you want to trade. We've even got, look at that, feeder cattle and live cattle. That's what the futures market kind of known for, is its commodities. But there's all kinds of fun things in here you can trade. There's Bitcoin down there at the bottom. See that old Bitcoin, or up there at the top, Bitcoin right there. There's where you trade Bitcoin. There's the market open. Okay, so the market's flashing around, filling all those nighttime orders. And that's why the market kind of jumps all over the place is on the opening bells, because it's filling all the nighttime orders. And there's NASDAQ's flushing down. So it looks like more people sold in the middle of the night than bought. So that's what that's telling you, basically, is all night long. But they got to match them up. The buys and the sells, they got to hook them all together. So the market will flush down, it'll rally up, and it'll flush down, it'll rally up. And then, of course, there's always, there's always traders that'll try and jump in and trade this, which always blows my mind. I'm like, why in the heck are you trading the opening bell? I don't know. Some people like to trade the opening bell. It's a tough time to trade because all they're really doing is just filling nighttime orders. But, eventually the market does trend out of the nighttime session. And in hindsight, you look back and you're like, why don't you just take that land? You'd have been rich, rich, rich beyond your wildest dreams. Well, we did have some good news. Let's do it. Let's just come down here. Let's see if that market just wants to keep trucking higher. We're going to take a long position on the Russell, because oftentimes that thing just keeps going and going and going like a little truck, right? See if it wants to just continue to rally up out of there. But we'll see. Sometimes it just flushes. Or it goes up and flushes down, up and back, and doesn't really go anywhere. But sometimes it just goes trucks right up and out of there. Look at the NASDAQ. Man, it's flushing bad. The Dow's rallying. Now, we had good news We had good news. I don't really want to cover up our trade right here. I haven't got a stop in yet. Let's go ahead and put a stop in. We'll just drop. That's not the stop I want. I don't want ape super scalp. I want this one here. There, we'll just put that right there underneath that price bar. Oh, go ahead, Lan. Stick it in there. Do it. There you go. All right, so now we can come and look at the news. We'll just let that go right there and see if it wants to rally. If it doesn't, we'll just get right back out. So we're going to come in here and look at the news. We had at 6:30 this morning, we had the GDP growth rate. And it says that it went from the forecast was 3.2, the consensus was 3.2, the previous was 4.9, and it was 3.4. So the previous was 4.9, and it dropped all the way down to 3.4, although it was forecasted to be down to 3.2. So that's GDP growth. All right. Corporate profits that come in 6:30, and it was speculated to be 3.3, and it was 3.9. So big corporations making a little extra money there. GDP price index 1.7, 1.7. So that was right on the money. Initial jobless claims 212, 210. So that's good news. Not as many people are claiming that they're out of work. And then the Chicago PMI comes in at 745. That's in 10 minutes. That doesn't really do much. It's forecasted to be 46. Previous was 44. We'll see. 8 o'clock, Michigan consumer sentiment. Again, another one that's supposed to move the market, but doesn't very much. Pending home sales actually moves the markets more than Michigan consumer. Oh, we just got stopped out. I heard it. So that market didn't rally like we thought it might. Gave up $17. We gave up more than that because I was already up some. So we lost like 100 and something bucks on that rotten move. That stupid market didn't take off like we was hoping it would, did it? All right, that's the name of the game. If it doesn't just go in your favor, just get out. You get another opportunity to get in later. Maybe it'll go again. But that's the opening bell. It usually just kind of goes up and flushes and jumps all over the place. Look at these topping tails, bottoming tails on the Dow. That's why it's tough to trade that. People look at me all the time like, Lan, why don't you just take the opening bell? You'd have been rich, rich, rich beyond your wildest dreams. Well, sometimes that's true, but sometimes it's not. It still wants to try and go. Like it just wants to stop everybody out and then take off and go again. So we'll try one more time. Drop my stop in there. We'll try it again. We'll see if it wants to go. We had good news, so it should rally. Pending home sales. That's the one I'm interested in. I got some spec homes that I bought that I'm trying to sell. So people aren't wanting to buy them because the interest rates are too high. We're like, well, we're giving you a good price on them, so it compensates for the interest rate. And I also just bought a duplex for that same reason. I just bought a duplex because the duplex got a good price on it because interest rates were so high. We went and beat the guy up pretty bad. It's good for me, not good for him. But he actually sold it for less than he bought it for. So he lost a little money on his purchase, and that, of course, ching ching goes in my pocket. So there we are, up a little bit. It's trying to push up. You're up $75, Lan. Just take it. Take the 75. There is a theory out there, and I'm going to tell it to you. The theory is if you trade one contract, you take it off at $100. If you trade two contracts, you take it off at $200. If you trade three contracts, you take it off at $300. If you trade four contracts, you take it off at $400. So in other words, you never expect the market to go any further than $100 on one contract. That's the same distance. If you go in with 10 contracts, you still take it off at $1,000, which would still only be the same distance as if you traded one contract for $100. Right? That's a theory out there. And so what happens is a lot of people trade that. And so when you get into the market on these setups, right, they will oftentimes only go $100 before all the scalpers take their money off, because that's what they do, right? They're happy taking $100 on a single contract, or if they get in with 10, they're happy taking $1,000. And so the market will move in these basically $100 ranges. That's why you'll get like 4 bars and a flashback, 4 bars and a flashback, 4 bars and a flashback. Now, sometimes people get excited and the market will go more than the 4 bars and then more than the flashback, but you'll oftentimes get a small pennant or some sort of a little retracement. This thing's going to come back on us again. If it comes back, and watch the tiny chart in the upper if it goes, you stupid market. So don't want to lose money. So I just took it off because it started to come back on me again. And now it'll start to rally. Watch this. Now it'll go without us. But look at the Dow's flushing. I don't like it. It shouldn't have, it's making another little flag. So it's doing that $100 range thing. And that's why the market does that. That's why we get these. That's why we get these. And I'm going to show you something. I'm not going to give away too much. Pit News Magazine is ready. It's ready to go. We're ready to rip and roll. And in Pit News Magazine, it's a good one this month. You guys are going to love it. Let's see. We got a really good cover. You're going to love the cover. I had to show it to you just because you guys are good stalwart members. Come get up early in the morning with me. Come and watch the opening bell. I had to show you the cover to Pit News Magazine. I know you're all have it. So it's kind of giving away something that's it's fun to see the cover. I don't know if I want to show it to you. It's kind of a fun one. Oh, come on, Land. Show them the cover. Pit News Magazine for April. Here you go. A little sneak peek. This is the cover of Pit News Magazine. Look at that guy. We got an article about inflation. Since we were talking about inflation, that's a Pit News Magazine cover. Isn't that awesome? Well, we got Jordan Black wrote up Maximizing Returns with Dividend Aristocrats. So we're pretty excited to show that, teach you a little bit about it, Dividend Aristocrats. And then Navigating Inflation by Land Turner, right there on the cover. And there's my cover, Inflation. I love it. I love it. But I wanted to show you something because we're talking about this $100 move. Look, good thing we got out of that Russell and didn't try to hang on, right? I want to show you something because this is what causes this type of thing. And we got an article in Pit News Magazine about it. And I want to see if I can show you the picture because it's a good example. Because I know you guys get caught in this all the time. Okay. It's called Gunning for Stops. So we've got an article in here about gunning for stops. And so if you come in, this is the picture of the article. And it's like, you notice how and you have a downtrend, beautiful downtrend, but the market keeps coming down and then it pops back up, comes down, pops back up, comes down, pops back up, comes down, pops back up. If you take that and you measure those, each one of those little drops for a single contract is about $100. $100 from entry to exit, $100 from entry to exit, $100 from entry to exit, $100 from entry to exit. And the market keeps going from $100 to $100, $100 to $100, $100 to $100, and it keeps spiking people out on their trailing stops, right? That's what this article is all about. Is it's talking about the gunning for stops strategy and how you would want to, sell on the gun and pick up your profits at the 100 level. So the whole idea is that, well, you got this $100 move, and that's why markets do that. And I thought I'd just bring that to your attention. So that's why markets move in these $100 moves. So if you wanted to employ that strategy, you could do that. And that's what this super scalper is set up here. So you come in and you say, okay, well, I'm going to do the super scalp. And you're going to come in and you drop that in. Oh, come on, let's do it down here on the NASDAQ. Actually, let's do it on none of these markets are moving. So you put your super scalp in, and let me show you how I got that set up. We're going to come in here to super scalp. All right, what was it? 88. So the super scalp is a stop, trail, 1, price bar back, limit 5. Okay, so you got your stop, your attached stop is at 20, your limit is at 20. The stop is going to jump in price as it moves. It's going to move price bars back 1.1 to entry. So it's actually an intercept order for entry, but then it scales out on the ATR, but it takes it off at $100. All right, so it's going to trail up. It's going to trail for entry, trail for exit, but it's going to have a limit order at 20. That's your super scalp. And that's, take it off at $100. And if you're going to trade 6 of them, you still take it off at $100. You just make 6 times more money than you do with one. It's the more, that's just the concept. So I just wanted to kind of teach you that little concept if you wanted to do that. It's part of the scalp and trail strategy. What I like to do, of course, is I like to scalp and trail. So I like to scalp one off at the 100 and then let the other one trail and see if it's not going to go farther than 100. And then we use the 100 to cover the expenses in case it turns around and comes back against us. That's the scalp and trail strategy, into anticipation that the market's going to actually go farther than, $100. So here we'll try again. This market wants to try and go higher again. We'll try it, and we'll put this, it's out there at 115 right now. Let's bring it full screen so we can see it. Come on, baby. Let's move. Let's do something today. So we put that at $100. You can see over there, right there. There's your, see that right there? In track and trade, that tells you where how much money you're making. And this tells you how much you're risking. Now I put it back 110 because it was back one price bar back behind the entry bar. Now I can move it up to the one price bar back just behind the flat bottom bars. So we're still in a losing, or risking $90 to make $100, right? Risking 90 to make 100. But if that market continues to rally, we'll move that up once again and skinny down that $90. But I'll watch. I don't like it to come back against me. So even though I got to stop down there, I'll watch that tiny chart and I'll watch the money. If it starts to go negative on me at this point, I'll just get out before it takes any money away. If it doesn't go up, make me money, I just get out. I don't let it take money away. But Lan, you might miss the opportunity for it to go back up again. Well, so what? I'll get another opportunity to do that. If it's not strong enough to just go up there and give me money, I'm not going to sit through a drawdown. So you just get out. It's not strong enough. Come on, you stupid market. If you're not strong enough to go up there and give me $100, I'm not going to play. We'll go find another market, you piece of crap. But you might give up the opportunity. It might go up. Yeah, but it might go down. And it started to go down. So why would I stay in? It's too weak. Too weak. Look at that NASDAQ. That one's going. That one's rocking and rolling. That's the one we should be looking at down there. That Dow looks like it wants to fall one more time. Wants to fall one more time. But it's bouncing off that magic blue line too. You got to be careful about that magic blue line. It could bounce off that. Or it could do the thing we all hate, worst of all, and just do nothing. Okay, that Russell's trying to go again. It's getting a little bit of energy underneath it. But the Dow's trying to rally here. Let's watch for the Dow. I'm going to wait for it to go. I want to see it go first. Give me 3 or 4 bars up, one little red pullback, and then we'll look for the next rally up. We'll probably feel bad that we got out of that Russell, but it started to show weakness in there. It's trying to break above that previous high now. If it holds, that would be another buy spot. But I'd rather see it. Give me 4 rally bars, 1, 2, 3, 4. Give me a little pullback, a red bar, and then I'll go with it again. I'm not going to try it. It was showing a little weakness in there and started to come back. So I just bailed on it. I wanted to go right up and take my limit out and didn't do it. Look, see? It's failing on us too. The Dow's failing. Come on, you stupid markets. We had good news. Good news. There we go. Let's try and go with that. That NASDAQ seems like it wants to go. We're going to stick we got the one little pullback, the little red bar came back, touch the, come on. Now push up there. Let's bring it full screen so we can see it better. Oh, it's failing on us too. Put our stop right under the red bar. Of course, we got in right as it broke the high and that failed. Breaking that high right there and it failed. Come on, push back up there. Had a nice, good run, little pullback. Let's start that next run. There we go. Break it up there. Come on. Stochastics is way up there in the top region. That's not good for our position. Usually we want to buy when we're down here in the bottom region. There's our call to arms on our MACD, clear down here. So that happened right here already. Now we're kind of trying to push higher. Come on, push it up there. So we've actually already hit our this is the micro mini. So if we were going to do that strategy where we take one off and let the next one run, we could take one off at $20 because that would be $200. We take one off, that'd be $10. That'd be $100, right? That'd be your $100 trade in the full size market. But this is not a full size market. This is the micro mini, so it's 10 times smaller. So rather than being $200 in profit, we're only up $1,800 or $18. So you have to take that into consideration. That market's already on the full size market made your $200 profit with quantity 2. Come on, get up there. I hate that it's getting weak. It's getting weak again. Come on, you lousy thing. All you can do is cheerlead. You can either cheerlead, yay, 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 or you can get mad and yell at it. Oh, you're a rotten dog. I have a tendency to be the rotten dog guy. At least in the beginning when it won't go. Come on, get up there. Well, just took one off. Let's see if we take another one off now. Too weak to go. Too weak. Come on, push up there. Oh my goodness. Come on, guys, buy. Hit the buy button. Hit the buy button. That's what makes the market go up. If you hit the stop buttons and limit buttons, those don't make the market move. The only thing makes market moves if somebody will hit the buy button. Got to hit the buy button. Buy market. That makes markets go up. Sell. That makes markets go down. Nobody's hitting the buy market button. The market won't go up. Nobody wants to buy. Come on, you guys. Buy the market. We had good news. Buy the market. Buy. We're going to get stopped out here again. It's going to fail on us. Market failed. Failure, one after another. That's why you don't take big risks, because how often is that market going to just push on through? Oh, look, stupid Russell pushed through, went all the way up to the 100% Fibonacci projection number. And you got out, Lan. Well, twice it failed on me. It's a good thing I did get out. The one time I got out when it should have gone, and it did go, but I got out because it came back against me. I'll have another opportunity. There's lots of chances to make money in these markets. Don't worry about that. The biggest problem is that you take all these little chances and end up losing a whole bunch of money, and then you're down $300, $400, $500, and you have to recover that before you can start making money. I'd rather not make money and not lose money than to I'd rather miss out on an opportunity by not losing money than lose a whole bunch of money and then just have to spend the rest of the day recovering. So say I'm only down $200 right now, or $200. I'm only down $2 right now. So I'm right at scratch trade. I'd rather be down $2 than down $300 trying to hold on to a position in hopes it'll turn around and come back for me. If I get in, a market just doesn't just immediately just go in my favor and move away from my stop, move away from my entry. I don't stay in. I've learned. I've learned not to do that. Learn not to. I know I miss lots of opportunities that would have gone in my favor because I get right back out once I get in. If it breaks and doesn't just go, I just get back out. Because I hate having to recover a $300, $400, $500 drawdown. Okay, see how it went 4 bars, pulled back, goes up $100 and pulls back, goes up $100 and pulls back. So that's your opportunity to get in. We should have got in right there, and I was talking instead of trading. Let's see if it'll pull back and give us an opportunity to get in. If it comes back to that red line, I'll get in. You're going to go up $100 and then stop. Actually, on this one, it would only be $10. So break above the red bar. There it is. There's $220. $220 on the regular market. So it'll go up 3 or 4 bars and turn around and come back because they take their money, right? That's scalpers. That's what scalpers do. Day traders want to get in. Once you get in, you want to get your stop move to break even, and then you want to let the market run and go and just go up there and breathe life into it, right? You have to decide whether you want to be a scalper or you want to be a day trader. We're going to go look over at the weed stocks here in just a few more minutes. I'd like to get into green. I'd like to be profitable on my day trading, at least a couple bucks before we can. And that was my opportunity right there. And I was talking and I didn't put my order in. That one's going for us. That's how David Duty trades. He's like, Lan, I give up on the longer term trades. I just don't do them anymore. I don't try to catch long trends. I've joined the $100 crowd. And so he'll take $100 and that's all he does. And he'll just do 2 or 3 contracts, $200-300, and he'll do that 3 or 4 times a day and he's done. So I just done. I'm done trying to catch trends, Lan. He says, it just doesn't happen often enough for me. So I'm just done doing it. I just take the $100 and I walk away. I've joined the $100 crowd. And I'm like, oh, come on, David. Sometimes those things will make you 30 grand in one run. Nope. He says, I've done it enough. $100 crowd now. He's just a scalper. It's all he does. He's my buddy. Been trading with him for 30 years. See, it's dying right here. 1, 2, 3, 4. 4 bars. Come on, you can do better than 4 bars. Come on. Look at it die on us. What the heck? Is this drive 1? Drive 1, drive 2, drive 3. That's your A1 right there. A1, A2, A3. Look at that. Russell flush it. All the way back down to the 50-period moving average. The Dow came down and made a beautiful little ABC pattern, didn't it? ABC, hindsight's always 20/20. Look at that thing coming down. It's hitting 61.8 right now. That's the golden ratio. Man alive. I'm sorry. I got to get me a drink of tea. Hold on. This is my Grand Canyon mug. See that? I went to the Grand Canyon recently and bought me a mug. That's what I got when I went to the Grand Canyon. Lived by the Grand Canyon my whole life. Lived in within a couple 100 miles or 100 miles of the Grand Canyon my whole life. And a couple weekends ago, it was the first time I've ever seen it. Never go down there. Look at those markets flush. Man, look at them flush. Why is it flushing on good news? This was our good news. You can see it on the S&P 500. That was the good news this morning. That thing's trying to break higher. Look, that's our red line where we would have got in if we'd have been paying attention. It's going to try and break above this high right here. Look at how it went sideways across there. It's got a resistance zone. It's got to hold above it. It's got to break above that red line and hold above it to consider it. There it goes. It's going to try to see if it holds above it. Hold above it. Hold above it. Come on, buddy. Come on. Oh, man. That's weakness. Okay, see this little shelf that's going in here? How the bars are inclining? It's an area of support. If it breaks that support area, probably flush. Try one. Just one contract just to see if it wants to go. It wants to break that trend line. Flush down. Of course, it's just going sideways right now. It's not moving up or down. This is a dead market. Come on. He just died on us. Don't die on us. Come on. We want to have a good morning. Good morning. Come on. Okay, the Dow's done flushing. It's going to try and rally. So is the Russell. Russell's trying to get back, turn back around. We're going to try and go with the Russell. Probably maybe a false move. Now this is a decision point because it could just be making 2 green bars back and then turn and flush once again, right? Turn and flush and go back down. So if that's the case, we want to be very careful. Very, very careful. But if it goes up, we want to catch that reversal. It's actually in an uptrend, right? Higher highs and higher lows. So drive 1, drive 2, possibly there's a drive 3 in there. That's why it's a decision point, because you don't know if it's going to go up or down. It's right there. It could do either one. It could right there between that red and green. It's trying to make a green bar. First green bar to make a new high would be an indication of a turnaround point. But it could just be that little pullback as people are scalping out their $100 and then have it turn and fall once again. We're up a whopping $14 because we're only in a micro mini. So that's 140 bucks. People are going to start taking their money off right here. So you start seeing weakness right around $100. Remember that. That's why the market pulls back against you. All the David Duties, they made their $100, they're going to pull out. If they went in with 10 contracts, they made $1,000. They risked $1,000 too, because if the market's only going to go $100, it can go back against you $100. That's your stop. Oh, I'm not going to risk $100. I'm only going to risk $50. Okay, do that then. Risk $50 to make 100. That's a good deal. You can do that. That's great. But on these big markets, sometimes $50 is about how wide the spread is. Okay, we're up $22 on our single contract on the NASDAQ, and it's starting to show weakness. Trying to make a little bit of money over here on the Russell, see if it won't bounce off that and start to rally with the green bars. The Dow's trying to go, but it's being weak too. Come on, guys. Push it up there. It ain't going to go. We're going to go edit trail. Price bars back. 1.1. We're going to take the reversal. Come on, push it up there. It's getting weak, getting weak. Come on, you can do it. Yeah, baby. What if you did the $100 thing, Lan? Well, we'd come in here and we'd go like this. We'd go add OCO and we'd drop that little limit right there to $100. And we'd say, okay, if we can make $100, we'll take it off at $100. $95. Now I got 2 stops. This one's trailing, this one's not. So I'm not really using this one. There you go. Pop it up there. Take the $100. No scalp and trail? No, I'm only in with 1. Okay, we got our $100. There you go. Oh, we're going to get out of that thing. It's broke. No longer making lower highs. So we're up $104. Did a David Duty. Pulled a David Duty. We'll call that our David Duty strategy. That's what we'll call it today. Tomorrow we'll name it something else. All right, should we go look at weed stocks? All right, let's go look at weed stocks. Marijuana. Here's your marijuana stocks. Let's move me. I wish I could just move me. I wish I could just grab my box and move me somewhere else. I could go in the upper right corner, but that covers up all our buttons. I can go over here. I guess that's better. If I do that, then it makes it too big. Do that, then I'm way too big. Go up there, go down here. How come they don't let me put me where I want? What about there? I guess that's best. Okay, we'll go there for now. That way you get to see some green over here. That's always makes the screen look better to see a bunch of green. All right, this is Grow Generation. Grow Generation. But let's start at the top. This is ACB Aurora Cannabis. I'm just going to flip through them real quick. These are all the big weed manufacturers. All right, they produce weed, marijuana, and people seem to like that stuff. There's Beto, ProShares Bitcoin. That's Bitcoin. That's not. Get out of there. We're looking at weed today. How come the colors are dark, Lan? It's because I just turned them dark. Let's see if we can fix that. Sometimes when you look at the screen for hours on end, those bright green colors and yellow colors, they start to bother you. So I tone them down sometimes. That's all that is. That's all that is. Okay. So we're going to save and apply to all. Let's turn on our chalk and money flow. Chalk and money flow. I like chalk and money flow. Let's turn off the momentum. It's about the same as the momentum. I used to use momentum all the time, but I've kind of switched over to chalk and money flow just because it's a little bit better color. It's pretty. All right. We like pretty. Okay, so here we go. There is the canopy growth. Let's go to the charts. I want to start with Aurora. Aurora cannabis. There we go. So Aurora cannabis. We've got a nice little break. It pulled back, broke that blue light right there. So that's almost like a little two drive down, drive one, drive two. These are all just sideways things. And then it actually started to move. So it went down again. We got a reversal. Now the question is it going to come up? Is it going to come down and then make another up? Now this thing's been as high as, I mean, it's been up here as high as $11. It's trading at $4 now. If it just went back to 50%, 50% would be right back here into the Fibonacci sweet spot right up in here. That would be a 54% increase in your money. All right, 54, that'd be 54% rise just to get it from where it's currently trading to the 50% level. Is it going to do that? I don't know. Let's go see if there's some options on it. Probably not any options on this thing. Let's go out maybe, let's do 85 days. Take a swag at it. Scientific wild ass guess. See, there ain't no volume on it. Nobody's trading that one. This isn't the most popular one. We'll go look at the more popular one. 22 days. See, nobody's trading it. There's a few on the open interest. They've been trading it, but there's not a lot of volume. So your spread's going to be wide, like $38 to get into that thing to buy a call. So don't do that one. If you want to buy some shares on it, you could. It doesn't cost very much, only $4. It's only $4, but you wouldn't make very much unless, oh, I just deleted my ruler. I didn't want to do that. That's my target. There's my target zone. So put 1,000 shares in, that'd be 4,000. No, let's do $1,000. Let's put $1,000 on this baby. All right. There's $1,000, right? So 70, 80, 90, right there. 218 shares. And if we risk just one price bar back down to here, that'd be an $86 risk. All right. And we'll see. We'll move our stops. We'll go ahead and buy some marijuana. We just bought some marijuana. There we go. Canopy Growth. Now, Canopy Growth is one of the bigger firms. So we should be able to come and see 113 days. Yeah, there's a few people trading some options in here. What's the spread? $91. I ain't doing that. Let's go to 85 days. $48. I ain't doing that. 50. $25. I ain't doing that. 22 days. $22. I ain't doing that. That spread's too wide. Too expensive. But that's market's starting to go. So let's they're $9 a share. So let's come in here and put 224 shares, $2,000 into Canopy Growth. Boom. And we just bought some more weed. We are weed buying. There's Cron. They just broke their all-time high. That's not an all-time high. Go back farther. They've been higher. See, they got lots of room to grow. We're growing weed here. Cronus Group. They're starting to go. How much are we going to put in this? Now, this one's getting a little toppy. Kind of want to see this one pull up, come back down, go back up. So what we're going to do on this one, This is only $2.50. Let's put $500 on this one. All right. Actually, let's put $1,000 on it. No, let's put $500 on it. We're just playing small here because we may have to dollar cost average in on this one. So there, we're going to buy right here. That's buying at the top. We know not to buy their land. You know better. Don't do that because you're going to have to wait for it to sit through a drawdown, and then you're going to have to dollar cost average and go back up. Do you really want to do that? That's why I'm only doing $500. So I can. Why are you doing it at all? Well, because it might go up some more, and then have to dollar cost average from up there. Well, if you look at the Fibonacci projection tool, look at the Fibonacci projection. That thing is already all the way up there at 200%. Already up there at 200%. Are you sure you want to buy some up there? Okay. Oh my gosh. Being hard on me. I want to buy some weed. Buy $100 worth. Okay. Grower generation, same thing. Look at that thing just going to the moon. It's going to the moon. It's got to pull back. Doesn't it have to have some pull back and then give us an opportunity to get in? 1, 2, 3, 4, 5. Baby's going to the moon. Man, you were going to do this on Monday when the thing started to go. That would have been back here. You'd have been breaking down in here. You'd have been up already. But no, you had to wait until Friday. Actually, it's only Thursday. But we don't trade tomorrow. Why don't you trade tomorrow? Markets are closed. Why? It's Good Friday. So there won't be any class tomorrow. No YouTube class tomorrow. And then I'm taking next week off because I got to move. I got to go back. I got things to take care of. Something suddenly came up. I got to be back in Logan on Monday. And I got to travel. Actually, I don't have to be back on Monday. I'm going to travel until Monday. I'm going to take a little holiday. Little vacation drive back. So we're going to take a little bit of time to get back to Logan, to my hometown. Where's what am I looking for? Chalk and money flow. See how it looks almost the same as momentum? A little bit different. Momentum. There we go. Things crossing over. It's trying to go. You going to put money on that land? It's already way up there. It's going to pull back. You know it is. It's going to do the same thing it did here. It's going to go up, pop back, go sideways. Maybe not. Put 100 shares on it. That's $300. No, just put like $100 in it. It's $3 a share. All right, put $250 on it. 82 shares. That way you can dollar cost average if it pulls back down. Okay. But I want to buy some weed, man. I want to buy some weed. Here's some more weed. Tilray. They have any options? They do. Look at the volume on that baby. Rock and roll. Oh, that's a 0 day. There's 0 DTEs. They're trading that thing. Oh, that's not bad. 300 to 1,000. That's what we're looking for. $28. $3 on the spread. Let's come out here and see if we can get an 85, 50, 85 day. 500 and 1,000. $6 on the spread. There we go. Except for we are already up at the rally. You want to buy high land and sell higher? It's a tough strategy. Why don't you wait for it to pull back? Because I'm talking about weed today. I'm not talking about weed when it pulls back. I'm talking about weed today. Let's buy an option. Yesterday, we talked about poor man's covered call. Can we do a poor man's covered call? We can't do it. It's not deep enough. We'd have to buy a call deep in the money, and there ain't no deep in the monies. We could do a bull call spread. You could buy it here. Premium per lot. That's it. Wait a second. 85 days. How come that moved on me? 85 days. There we go. How deep is it? How deep's our chain? It's not deep at all. If we wanted to buy this one, it's way down there. That'd be $152. 85 days out. You could do a poor man's covered call. We talked about that last night in class, so try to example one of these. So we buy that one at a delta 94. You do delta of 89, it'd be $105. But that's okay. We'll do this one here, delta of 96. That's like almost 1.0. So you buy that, that's only $147. And then you come in here and you sell a call against it. But this time we don't want to sell an 85 call. We only want to sell like a 22-day call. So kill that one. Oh, that killed both of them. Man, good hell. Go ahead and buy that again. Put it on there. Wait a second. I had it down here before. I went to $1 already. I went to 1.0. Okay, and then we're going to, oh, that's the 22. Can't you do anything right today? 85 days. Okay, there you go. That's better. So the 85 days is $147, 85 days. And we're going to pay, oh man, $31. $31 in spread. That's because there ain't no volume, 0 on the volume. I don't know if we can do a poor man's covered call on this thing. We're in the demo account. They'll probably give it to me anyway, but they're going to charge me $31. It's not going to show any money. And so like in 20 days, we'll go, well, Lan, why'd you do that? You're a rotten trader. You didn't make any money. I was trying to example one. Well, don't example it one on that you're going to lose money with. So we take that one at 85 days. Now we're going to go back to 22 days. And we would sell our call up here, 22 days. And that's going to only give you $15. That ain't worth doing. Well, it's $15. That's 15 better than what you were going to get. Yeah, and then your spread's only $1. You're going to $14. That's your covered call right there. Poor man's covered call. But we don't need to do a poor man's covered call on this one. Why? Because we can afford to buy the shares. Shares are only $2. Let's come in here and buy 500 shares. That'd be $1,200. Okay, boom. You just bought 500 shares. Why are you buying 500 shares at the top of that thing's just barely breaking. It's going to pull back, and then you're going to go later. I know, but we're going to do 500 shares here. And then we're going to come in here, and we're going to sell 22 days. We're going to sell how many calls? We're going to sell 5. 1, 2, 3, 4, 5. And that's going to collect $77. Yeah, but won't they take your shares away if it goes up above that red line? They will. But I also get the money between the green line and the red line. So I'll make $50 on the shares, and I'll make $77 by selling the option. So I'll make more money selling the option than I would on the shares if the shares just go up to the red line. That's not a bad deal. Not a bad deal. What happens if it falls though and comes back down? Well, I'll lose on the shares, but I still get to keep my $77 on the sold put or on the sold call. Well, I guess that's not such a bad deal after all. You plan on having the shares come back. You're going to buy some more down here anyway, right? Yeah, I'm going to buy some more anyway if it falls. Okay, I'll let you do that. All right, let's do that then. You're going to let me do it, are you? Yeah, I'll let you do it. Okay. Going to have to pay $3. Just mark it into it. Boom! We just got ourselves a covered call. All right, let's come down here to USO. Oh, that's oil. Lan, that's not part of the weeds. Why is that in there? Delete it. All right, so what do we got? On Aurora, we got 200 shares. Well, Lan, 200 shares. Can you do a covered call? I can't because there's not enough volume. Well, maybe on this one. $9 though. $9 on the spread. And I'd have to do 2 of them, right? $10 on the spread, that'd be $35. It's not really worth it. The spread's too wide. So we come out here. Let's see if you're going to sell a call against those. You probably want to sell it up here. $28. Spread, well, the spread's $3 on that one. That's why there's 1,400 of them. So we could do 2 of them. Let's do 2 of them. Boom, boom, just like that. That's not bad. You going to let me do that? Yeah, okay, I'll let you do that one. So we're long 2. That wouldn't be bad. We'll do that one. Okay. Just mark it into it. Yeah, they're not going to dicker with me. Okay, so let's go see if we can do a covered call in 200. Oh, can you do a covered call on that one? Probably could. Let's see. Gonna sell some premium. You know what? We could also come in here because we're gonna buy 200 more, right? We could sell a put down here. Oh, not that one. Let's do 22 days. And we got anything? We can, I think. We're gonna sell a put down here. Give us $20, $26, because we're gonna buy another 100 shares there anyway. So if the market pulled back, we'd buy another 100 shares. Well, that's what that would do. If it pulled back, we'd buy another 100 shares. If it doesn't pull back, they're going to give us consolation prize of $26.50. Okay, you want to do that? Well, you got 200 shares. You need 200. Why don't you do 2 of them? What? You're being aggressive there. You can let me do another one? Yeah, I'll let you do another one. Okay, we'll sell another put. We'll sell a put down here. Which one you want? I want that one right there on that center. I want that. Why is it not showing up down there? Oh, these are puts. Go to your puts, land. I want that. Oh, 1,000. That's $500. That's $71. Ooh, $1. $1. That's not a bad spread. 71. That's why. Okay. That would give me another 100 right there. And then they're only going to give you $7.50. That ain't worth it. $7.50 you didn't have. Yeah, but I got to pay $1 in spread. You're going to have to pay $1. Yeah, they're going to. Yeah, that's not worth doing. Kill that one. Oh, it took off both of them. Sell, call, sell, call, sell, put, sell, put. Which one did we decide we're going to do? Where's the money? Way up there. That's not what we want. $50. If we sell that, they're going to give us $12. That's not good enough. We were up higher than that. $34. But look at the volume on that one. It's $20 spread. And you're just chewing it all up. It's almost not worth doing. Well, that one's $80. That one's not bad. And the spread's $15. They'd give you 100 more shares right there if you did that one. But they're going to give you $80 to take those 100 shares. All right, if it pulls back, I'll do that one. Let's go ahead and take that one. So what that's going to do is going to give me $73. Boom, right now. Let's go buy some nice steak dinner. They just gave us $73. And if this market pulls back below that red line right here, then they're going to give me 100 more shares. Yeah. And they're going to pay me $73 to do it. So I get $73. And then if it pulls back behind there, I get 100 more shares of Tilray. But what if it goes up? Well, then I don't get my 100 shares. I just get my $73. Oh, that's cool. All right. Let's do this then. Let's sell a call above it and see what we can get out of it up here. $112 if it goes up there. Ooh, 104 up there. Where do you want to get out? So I don't make any money above that point, though. So I make everything between here, between the green line and the red line. If it keeps going up, that'd be $300 plus an additional $95 for selling the call. So I get $95 plus $304, but then they're going to take my shares away. It's all right. Who cares? Buy them back. You can buy them again. It's kind of like putting a limit order out there. That's what it is. But they're going to pay you $95 to put your limit order out there to take your profit at that level. That's all that's doing. And they're going to pay you $95 to take your profit at that level. That's right. And they're going to give me this one here, $73 for putting that one in there. And if it comes down, they're going to give me another 100 shares. And the $73? Yeah, I get to keep the $73 and 100 shares if it comes back down here. Well, that doesn't seem like such a bad deal. That's what we wanted to do anyway. Okay, let's run that one. I have to put this one on. Let's go ahead but what if it goes above there, Lan? What if it goes way up there? I mean, what if it goes all the way up there? Well, that's the problem. That's the problem. Anything above that red line, I don't get to make. I stop making money at the red line. So if it did go all the way up there, I'd lose $764. I wouldn't actually lose it. Not losing it. It's just unrealized something, it's like looking at this market and saying, well, look, if you would have bought right there, Lan, you'd have made all that money. you'd have made that much money. Well, I didn't buy right there, so I didn't make all that money. But I could have. You could have. Yeah, but I didn't. It's the same concept. You keep thinking you're going to make all that money. Well, if it goes up there, I could make all that money. But would you have done that anyway? I mean, you're in it with 224 shares, right? If it would have gone all the way up there, you'd have made all that money. But you're going to stop your profits out there at that red line, but only for 22 days. I mean, it'll start making money again after 22 days is over. Let's say it goes to right here and you miss out. You miss out on $281. Well, you still made 264 here and you made 92 there. So you missed out on $200. And then once that 22 days goes, it'll start making money again. All right. It'll start making money again because that red line will go away. It's not there anymore. So at that point, you'll start making money, but you would have skipped that $281 in profit. I don't want to do that. Why not? Why not? What's the chances of it doing that? What do you think? You think it's going to go all the way up? It could. I'm not saying it's not, but we're kind of thinking it's going to go up here like this, right? And then maybe turn around and come back down. So we don't know. We don't know. Well, that's why we got this one down here. So we can pick us up an extra 100 shares if it comes down here. That's the game you're playing. Come on, throw darts in my tent. Throw darts at my balloons. That's what we're doing. I'm playing a carnival game here. Let's go ahead and play this carnival game. Besides, that's only one. That's only one. They're giving us $87. We got one. Why didn't we do two of them? Let's retrade that. Retrade. Buy one more. Okay. Market order. Put that in there, baby. I'm going to retrade it. How come I didn't retrade? Retrade. Quantity one. Buy one. Come on. Give me one more. Could not place your order. Call order. Buy orders cannot be placed to cover short positions. Orders must be placed. Oh, they're not going to let me do it because I've already got the put down here. That's why. You rotten dogs. They're making me cover. They're making me cover this put with one of those longs, and then this is covering the other. So I got 200 shares. This represents 100 shares. That represents 100 shares. So they're making me cover both of those options with 100 shares. That's not nice. I want that. I guess they're not letting me do it cash secured put. Okay. We'll go with that then. All right. What else did we do? This one, we did 38. We only did 38 shares here. We can't even do a covered call on this one. Well, it's already started to fall. We're losing money on all these. Every single one of them. We only did 38 shares on this one. $2.65. That's because we thought it was going to fall. Can we do options on it? Let's do calls. 22 days. Can we sell that? Oh, sell it for $7.50. Woo. We could buy it. We'll have to pay $5 in spread. You could buy that call. It's only 22 days long, though. It's not worth it. Let's not do that. Yeah, we'll just stick with this one. We're at 38 shares. That's because we're expecting this market to come back down and then go back up, right? All right. So have we bought enough weed for the day? We bought enough weed. There's our weed stocks. Okay. There's how you buy weed. Legally buying weed. Okay, that's it. Let's go over and let's close that out. We'll come back and look at that in a couple of days and see how we're doing. And come back and look at our day trading, see what's going on. Market's pulling back. That should be another drop out of the bottom of this thing. Unless it breaks above here, and then we'd expect it to start to go back up again, right? Making, ooh, that's a pretty picture. So down, up. That's what we would look for. But it's not moving. It's not moving enough here. It's just barely kicking around. Barely got any life to it at all. It's a holiday weekend. Okay, so the idea is we're in lower highs and lower lows, right? So here's your high. Oh, that's not a good line. Here's an arrow. Here's a high. Here's a high. So it's got to break above that high before it's not making higher lows. I mean, it's making lower highs. So that means as long as it stays there, you'd expect it to go down again. Okay, it's making lower highs. We'll put an order in there, Lan. No, we're about done. I'm going to let you go. I've made $104 on here, and we bought a bunch of weed. So that's my last day. We're going to let you go. I do have a Sunday school lesson for you, so don't run off. I've got a nice Sunday school lesson for you. And let's come say hi before we do our Sunday school lesson. All right. We got Bruce R. Bruce made it. Bruce was in class last night. It was good to see you in class last night, Bruce. We got Michael Bruce. Michael Bruce changed up his picture. Where'd your bowl go, man? That's that little that's that little clock. That clock was drawn by AI. It was an AI clock. You notice the hands are wrong. I used it anyway. That's all right. There's Selena. Hello, Selena. How you doing? There's Kirk. It's nice to see you, Kirk. We got Gary in the house. Nice to see you, Gary. John David Lumberg's making it. It was great to see you last night, class. John David Lumberg. We got Michael Bruce. I am only the one not being able to log into the software. Yes, you are the only one. I don't know. Gary says he's logged in. I'm logged in. Seems like I want you to take a break, huh? You do too many 0 DTE options. Is that what it's doing? Did you get flushed out? Well, if it's the stocks version and you over day traded, you can get your account. Oh, look down here. It's breaking higher. It's not going down. It's going to go up and break that new high and then start an uptrend. So if you're trading stocks and you over day trade, they will lock your account for 90 days. If you're under $25,000 and you day trade in the stock market, they'll lock your account for 90 days. So don't do that. But if you're in the futures market, they don't do that. So I don't know why it wouldn't be able to let you log in. NQ, flushing. Well, it's trying to turn around. It's trying to turn around, Mr. Breezy. Mr. B. Beezy. What about the range bars, Lan? You never talk about the range bars anymore. Oh, I talk about the range bars a lot, but I didn't talk about them today, that's for sure. Should we go look at them before we run off? Let's go look at the range bars. Range bars. I like range bars. Love the range bars. No doubt about it. I thought I talk about the range bars all the time. Don't I? I don't talk about range bars anymore. I'll focus on range bars a little bit more. We do have a little bit better luck on the range bars, don't we? Because there's a little bit more granular. We'll talk about the range bars. There's the range bars. Now, I didn't change the S&P 500 to range bars because that's the one we trade options on. We don't have any options on it, though. Mark is probably not going to do a whole lot. It's a little early to be putting options on, but we could, just dead. Market's dead today. No more news coming out. Well, there is some news coming out, but actually the news that came out still didn't move the market. There's your range bar 12. I put the NASDAQ on range bar 12. I doubled it because it was going too fast at 6. Russell, that's 12. Dow, that's 6. They're still just getting sideways. We need it to if it's going to go up, we need it to be a little bit more bullish. We need to get a nice good run. 3 or 4 or 5 bars. I like to see at least 4 good bars and then that little red pullback. Bruce and I had this conversation last night. I want to see it trend first. There, look, see, there was 4 bars and then it came back and it just never went. It went back too far. So breaking above this line right here would be the new uptrend right there. It's trying to do it right now on the Russell. It's just the market's just weak right now. We're just not getting anything. Be a little scary to get in here and try and trade this thing and think you're going to get a nice big trend. Why would anybody buy right now? Why would anybody step in and start hitting that? Why are they going to get excited enough to start hitting that buy market button? What's going to happen that's going to cause traders to want to start hitting that buy market button on the Russell 2000 right now? 8:30 in the morning. Is there anything that's going to make people want to start hitting that buy market button right now? The fact that it's breaking above that previous high, and you got technical analysts, technical traders, that's about the only thing that's going to, I don't know of any reason why anybody would want to start hitting the buy market button right there in anticipation of the fact that it might come up here. And that would be their target. So they're going to try and pick up what? From here to here? It's $125. All right. Go for it. Then it's got to go and it's got to hold above that. And then why would anybody want to just start banging on the buy button? This market's just sideways, 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 sideways. Nobody's banging the buy button. Few people are. They're trying to get it to go up there, aren't they? That's a nice little pattern. 4 green bars, 2 red bars pull back. Now it's trying to make the next extension. The thing is this was still in a downtrend, lower highs and lower lows. This is lower high, lower high, lower high. Now this is the first higher low or higher high that we've got. So now we got the first, the high, first higher high. We got the low, higher low. But it's 4 bars. That's it. Come on, give us more than that. Starting to lose its mojo on that 4th bar. See the tiny little chart up there? It's got to hold above that red line right there. Let's bring it full screen so you can see a little better. Get me out of the way. Michael Bruce says he likes Power Hour. Power Hour has been good for many people. Sometimes I struggle sometimes in Power Hour. Sometimes I've had really good trades in Power Hour, but more often than not, I kind of struggle in Power Hour. Yeah, Mr. Breezy. Nice thing about tracking trades, you can put Heikin-Ashi on the range bars. Absolutely. That's kind of my secret weapon. When we turned that feature on, that was a breakthrough. What? What are you talking about? Track and trade. I'm new here. I don't know what the heck you're talking about. That's the software I'm using. Here, I'll show you. It's won Stocks and Commodities Reader's Choice Award 7 times. I know it says 6, but we've won it one more time since then. This is the software we're using right here, Live Futures. Go over to trackandtrade.com, download it. You can play with it for 2 weeks for free. Live Futures. That's what we're trading with. Good software. Yeah, that would have been a good trade to get in on that first green, but that wasn't a signal because we're still in a downtrend. 1, 2, 3. So this is just a reversal. Now we need another little red set of bars, little red bars, and then we can get in. Come on. I was going to let you guys go. I've got a Sunday school lesson for you, so don't run away because I got a really good Sunday school lesson for you. What's it going to do? It's going to go up and bounce its head off of that. Come on. Go up there. Push it up there. People are they're hitting the buy button. They're doing it. They're hitting the buy button. Trying to get it up there. There it goes. Touch it, touch it, touch it, touch it, touch it. You can do it. Break it, break it. There's the previous high right there. They're trying to break through there. They did it. They did it. Oh my goodness, they did it. Somebody's happy. Now what's it going to do? It's going to hold above it. We need 2 little red bars. I'm not going to play it until they give us a little bit of a pullback, couple of red bars, and then we'll go on the next leg. Come on, guys, sell off your $100. You take your 100, sell it off, give us a chance to get in. All right, while we're waiting for that, we're going to go look at our Sunday school lesson. Why do casinos have a max bet size? Why do casinos have a max bet? Have you ever noticed that? You go down to the tables in Las Vegas and they show you a max bet. The max amount of money you can bet is $200 on this table. Why is that? Because if you could dollar cost average, and dollar cost average is not cannonballing. That is not, should not be in there. Cannonballing is when you just dump all your money in at once. Of course, cannonballing would be like putting your $200 in, right off the bat. That would be cannonballing. But if you could dollar cost average a casino, theoretically, you could never lose. If there were no max bets, you could continually bet your losses until you finally win. When trading, your max bet is your account balance, which is why we say it's imperative that you be well enough capitalized to accommodate multiple losses in a row and still be able to come back and make more money. All right. But that's why they have max bets at a casino table. They do that because, hey, you could just always bet your losses and never lose if you had deep enough pockets. And I actually had an example of that. I did a video one time of me playing the roulette wheel, and I just continually played the roulette wheel. And I had a strategy where I would continually bet until I just won it all back. And then I continually bet until I won it all back. Won it all back, won it all back, won it all back. I never lost. Go forever and never lost. You just made real small $5 increments forward every time. Forward every time, forward every time. But if you have a max on the table, they don't let you do that. Max, you can rent, you get up to the max and you can't bet your losses anymore. And the game's over. They take all your money. So then you have to start all over and try to get up to max bet and not ever get up to max bet. But unfortunately, every strategy I tried, I would always hit max bet. But if I didn't have to hit max bet, they could never win. I'd just go a little bit further, and then I'd eventually get it all back, do it again, get it all back, do it again, get it all back, do it again. So that's why in trading, you can do that if you got deep enough pockets. But, the problem is the market can stay illiquid and can stay irrational longer than you can stay liquid. And so that's why we don't trade like that. It's not, I've seen people trade like that. That's the other side of trading, right? That's the other side of trading. So the other side of trading is that, well, we anticipate that this market's going to eventually turn around and come back down, right? So what we do is we would sit here and say, well, I'm going to continually take in anticipation that this market's going to just, stay in this little snaky trend thing. So I'm going to anticipate that it's going to come up here and then turn around and come back down. So at some point, I'm going to decide to just take a short position. And if it doesn't fall, I'll take another short and another short and another short, right? I call that the devil's breath. I think I got it in here. I can even show it to you. So that's our Sunday school lesson. The devil's breath right there. All right. So Balaam's ladder. So you just keep putting on more positions until you hit max loss, which in this case was 18, and then that's where you blow your account up. Or it turns around and comes back down. So I've traded this strategy before and made a lot of money, but then you blow your account up. So the idea is, and I've watched other people talk about how they do this strategy, is they're okay blowing their account up because every time they make a bunch of money, they set it aside and they start their account over small. They keep their account small. They make a bunch of money. Anytime they make any money, they pull it out and put it into another account. Take it out, pull it out, put it into another account. Take it out, pull it out, put it in another account. And then when they blow their account up, well, they just bring it back. And then they start over again. They make a bunch of money, make a bunch of money, make a bunch of money. They blow their account up, they go back and pull it back again. The thing is you got to be able to make enough money more than what you're going to blow your account up with. And that's the game, right? I don't play that anymore because I've blown my account up trying to trade that strategy. Make a bunch of money, make a bunch of money, make a bunch of money. And then you blow your account up and it ends up being, you blow up an account that's bigger than the amount of money that you made. And so you end up losing money overall anyway. That was my experience. And I did it a bunch. I mean, I was making a bunch of money. The problem that I did is I didn't save my money. I started spending it. I actually started giving it away. I was making so much money doing this strategy because you can make a lot of money for a long time because you don't ever use a stop. You don't ever get stopped out. You're always in the market, right? And then you make a bunch of money. And I was giving my money away to charity. We did videos where we're like, hey, let's give some of this away. We pulled up the little charity thing on the YouTube, and we just started giving the money away to all these charities, right? And then I blew my account up, and then I couldn't go back to the charity and say, can I have my money back? Can I have that back so I can trade it again? So that was the problem with that strategy for me. I gave all my money away. So the idea would be, well, I think it's going to turn around. So then you come in here and you're going to say, well, for me, I wouldn't just, the problem is most of these guys will come in and they'll just say, okay, boom, and they hit sell right now. I think it's going to go down from here. All right. They may be right, but it might be going back up. So I would get a little bit fancier. I'd say, well, I'm not going to actually take a short position until it actually turns. So I would put in here the reversal strategy, and then I would just drop that in there. And actually I'd do one bar back. So we come in here and we'll go one price bar back. And so I would just trail it up until it wanted to reverse. And then if it didn't reverse and started to go up again, I would trail another one up until it reversed. And then I would trail another one up until it reversed. And it works really good until it doesn't. Right? So try it on a micro account. This is a mini. Try it on a micro where you're 10 times smaller, and you could just continue to trail and get reversal. Eventually you have to do more than one because it starts to get so far away that you're reversal. Okay, so now we're short, right? This is just kind of a reversal strategy. There's nothing special about what we just did here. Normally we just put our stop in and we'd get out if it just started to go back up. But then with this strategy, with our Sunday school strategy, right? This one here, we're not going to do that. If it starts to go up again, then we'd start to trail up again and we'd add another one on. Okay, so well, there you go. So now we're just going to come in here and we'll add another one on. If it reverses once, we'll go more. And actually, again, I'm going to do this on price bars back. We'll do one. So normally what we'd do right here is we'd just get out because it didn't reverse, right? It didn't start to fall, started to go up. So we'd have just got out. So right now we're in an $80 drawdown. But with this strategy, you're like, well, I don't care. It'll eventually turn around and come back down. Maybe it won't. That's when you blow your account up. It just keeps going and going and going, and you can't get your money back. But most of the time, it does. It works great. This is my modified version of the Balaam's ladder. You can do the other side too. That's called the Christmas tree. So you do it when it's coming down. You just set all your, instead of setting limits out there though, I stopped doing that. I waited for the market to actually tell me it was going to turn around, and then it would turn around. So I just trail my stops until it turned around, rather than just picking random locations or, price levels along the trend. I just wait for it to turn around. But this way I don't stop out. You never get stopped out because you don't ever use stops until you take a profit. Then you have to decide where you're going to take your profit at. But once you get into the market and the market starts to go in your favor, then you just trail to exit. And then you actually do a trail reversal or whatever, and you start going. So if this market starts to go, we'll just trail up until it turns around at one point, turns around, starts to fall. But we're running out of time now, and I'm in an $80 drawdown. Guess we'll stick here for a minute. If you guys want to stick here, I'll play it. Mr. Breezy says, put a slow stochastics in there with 233, 22, and an arrow at 99 and 1%. Okay, let me see if I can see what you're saying. So you want to have the stochastics period at 233? Is that what you're saying? Up here? You want that to be 233? And then this to be 2 and this to be 2? All right, 233 and 2 and 2. And then display the arrows. So we, in the uptrend, trying to hit the peaks up there. Is that what you're trying to do? All right, we're short 2 now. So we got Mr. Breezy's stochastic settings. He likes that apparently. We'll leave those on for a minute here. Let's go back and look at him back here. Lots of arrows. All right. So now we're 2. Now the question is, are you going to, if it doesn't drop and give you your money back at this point, and it continues to rally, and you're short 2 on this strategy, this Sunday school strategy that we're talking about. Mr. Breezy. Let's come back and see what Mr. Breezy's saying. He's like, shh, don't tell anybody. Those are his secret settings. So I did it right. I see Mr. Breezy says 99%. He says he likes that setup. There you go. We just shared Mr. Breezy's favorite stochastic setting. All right. So now what we have to do is and the question is, are you going to add 1 more or are you going to add 2 more? If you keep adding 2 and 2 and then 4 and then 6 and then 9, that's where you really get out of control. But if you don't do that, your dollar cost average starts getting so far away that the chance of it pulling back is even slimmer and slimmer. You need to kind of double up, but we'll just do 1. Okay, so we'll come in here and we'll trail. And actually, we're going to have to change that once again to trail. Price bars back. You could trail on the ATR with this strategy, and then you wouldn't be getting in all these, with all these so many times. We still wouldn't be in on our short position yet. You could try it with Mr. Breezy's stochastics. Every time you got a down arrow, you'd add in another position until it reversed and came down and paid you off. Mr. Breezy says he's been working with David Duty. Have you seen him lately? He got really sick. He's not been in his trading room lately. Well, if this market just keeps going up, and never does turn around and retrace, this is where you blow your account up. But we got $47,000 in here, and we're only down $155. So stochastics is way up in the upper region. Well, with Mr. Breezy's secret sauce, MACD is way up there. We should get a turnaround here soon, right? It's getting weak. It's not trending higher. We got all these little topping tails. There's breaking across, trying to go higher again. This takes a lot of patience because you watch these numbers go against you. $200,000, $300,000 before it finally comes back and gives you something back. Scary. That's why I don't do this strategy. But you're doing the strategy right now, Lan. I know. But you haven't seen me do this a lot. Because I've blown counts up doing this. A lot less likely to blow your account up if you just stop yourself out when you're wrong. Come on. We want you to fall. So he's getting out of control, man. You're going to wish we would have done it the other direction, right? That's another thing. Whenever I was trading the strategy, I was like, I should have just taken the signal the other direction. I'd been fine. If I'd have just been trading normal, I don't call this normal trading. I call this wackadoo trading. This is wackadoo trading. Not that you can't do it. It's pretty popular, pretty common. But I'd rather just trade normal. What's trade normal? Just take the signals, breaking of trend lines, breaking of red to greens, first green candle to make a new high. And if it doesn't continue to rally, just get out. That's my normal strategy. This is the wackadoodle strategy. This is like always constantly trying to catch a falling knife or always trying to catch a rising trend, the turnaround, the reversal. And I tell you all the time, don't I? I say, don't try and catch reversals. Why? Because they're so hard to catch. Reversals are really hard to catch. That's what we're doing here. We're just constantly trying to catch reversals. It's really hard to do. Maybe this is a good bad example. A good example of why you don't trade this strategy. We're down $346. The market hasn't given us a single reason to put another position in yet. You say, well, if it hits that line up there, 21.55, I'll take another short position up there. Dollar cost average me up. There's another Mr. Breezy arrow. You want to take a short position right there, Mr. Breezy? If we short two, boom, we shorted two more. At that point, now we double dollar cost average and brought our average entry up to the distance between here and here. So that's why our order is there. So now it doesn't have to move back nearly as far to just get us back to break even. But nothing says that the market has to stop. This thing's on fire. It makes you feel really bad. You didn't take that first order down there. That was a reversal order, wasn't it? We didn't take that thing. How much would that have been if we'd have got in right there on that first green candle to where it's currently trading? That's been a $400 run. Now we're sitting here trying to take the reversal. Shake my head. Man, look at this thing go. This is what we were waiting for all morning. You look back in hindsight and you're saying this was a pretty good market. No, it was tough because little 3 bars, 1 bar back. Maybe we'd have caught that one. This one you wouldn't have caught. That whole run right there you wouldn't have caught because it didn't give you the little ABC, didn't give you the red bars. It just went without you. And then you get the little pull back here and you say, okay, I'll go long here, and it fails. If you're smart enough to do the reversal, you might have caught that one down. And then you go, okay, little pullback. Now it's going to go down again. No, faked you out, went back up. You're like, okay, well, now we're going to wait for 2 bars, wait for the next up. And then that doesn't happen. It comes down here and you're like, okay, first green candle to make a new high. Try to make that one. Nope, not going to get it. So then it comes down. You say, well, I'm not going to take the next one. And then it goes up. And then you get this one. And yeah, okay, we could have caught that one. We should have caught that one. But it was still making lower highs. We didn't catch it. We didn't take it. And then it's all the way up here already. And then we started to do the Sunday school lesson. And so we jumped in here trying to do a reversal. And this reversal just never happened for us. It just keeps going and going like the Energizer Bunny. We're down $765 waiting for a reversal. How much you willing to let that thing go against you before you yell uncle and get out? I'm never letting it go against me till my whole account's gone. $47,000 is how far I'm going to let it go against me. Okay, do that then. Mr. Breezy says we were in the bats and butterflies class at one point. That was a long time ago, wasn't it, when we did bats and butterflies? We talk about bats and butterflies a little bit in here when a pattern shows up, when one of the butterflies shows up. There's a butterfly pattern right there. Let's go draw it in there. Little butterfly right there. Boom, 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 boom. Just like that. That's a butterfly. Problem is, butterfly off that right wing is supposed to flush, and it didn't. So that's a butterfly pattern. This thing just got legs on it now. Now it wants to. Now that we're trying to example a Sunday school lesson, this thing's going to the moon. It's showing a little weakness now, so we can come in here and I think I missed it. Too slow. Yeah. Let's put 4 in now. Okay, now we're 8. Now it has to just come back below that red line to get some more money back. Now you have a question here. If it'll come back to that 8, that short 8, see, we're now we're only down $200, $300. We were down $700 at one point. Now if it keeps running, now we're going to be now we're really in trouble if it starts to go back up again, because now we're short 8 contracts. We really need it to come back. Come on. We need a failure here. Look at that trend. That's amazing. Come on, you rotten dog. If it comes down and hits our red line, the question is, are you going to lighten your load? Are you going to take some of those off at break even because you're fearful that the market might just come down, do this, and then turn and go up again? So it gives you a chance to get your money back. You could take all 8 off and say, oh, I'm done. But then what if the market just flushes? And then you're like, oh, I could have had 8 contracts all the way back down to the blue line. I think this is what Bruce was doing. I think this is a little bit kind of Bruce's strategy, what Bruce was doing. I don't know if Bruce is still doing that or not. So that's your dilemma on this strategy. If it comes back to break even, are you going to lighten your load or not? Are you just going to hold on to those 8 contracts and see if they're not going to fall and make you rich, rich, rich beyond your wildest dreams? Now, if you're doing this in the micro mini, 8 contracts, that's not even one. Oh, that's not even one mini, right? We'd be still sitting there with only 8 contracts, and that's less than one mini. 8 micros. It takes 10 micros to make one mini. So we'd be down $12.50 at this point instead of $125. So think about that. Think about that, my friend. Gives you a lot more staying power. Of course, then you sit here for 3 hours to make $12. So you have to decide if you want to do that too. Okay, are we going to lighten our load? Or do we think it's going to fall and we take all 8 of them down? You could lighten half of them. You could say, well, I'm a little heavy on there. Maybe if I could get it to just take 4 of them off a break even, I'd be happy with that, because it might turn and go back up again. Gives you a chance. Comes back, gives you a chance to lighten your load. Now it turns and goes back up, and you'd be happy you did it, but you still got 4. Now you got more staying power in case it does turn and go back up. But if it falls, now you don't have all 8 contracts either. But you can now, if it'll start to fall and give us a nice cascade down, you got good 4 contracts in there. Now you can start doing the king tut, right? Pillar down. Pillar down? What are you talking about, Lan? I have no idea what you're talking about. Called the king tut strategy. The king tut? Yeah, that's the king tut strategy, where you start pillaring down, right? We talked about pillars. You know what pillars are. We could do the yippee-ki-yay. That's the yippee-ki-yay right there. Where are you getting all these, Lan? The yippee-ki-yay? I've never heard of the yippee-ki-yay. It's in my book. It's in my book. What's your book? I told you about my book, haven't I? Haven't I told you about my book? My book, Stock Market Playbook of Strategies. It's out on Amazon. Go search Lan H. Turner. Get my book. Here we go. $377. Now we're making money hand over fist. This is Bruce's strategy. All the way back down to the blue line. All the way back down to the magic blue line. All right, guys. I'm going to let you go. We're back in the money. Made some money. Making money hand over fist. Look at us go. Making big bucks. Mr. Breezy says, measure it back to the Fibonacci sweet spot. All right, let's do that. Boom, 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 boom. There it is. We're coming down almost 50%. You could lighten your load if you wanted. Take a couple of them off. We could do the castle. Castling's more fun. I'd rather castle. But we haven't even gotten into a situation where our stops even come down to our break-even point yet. But you could castle. You could come in here and say, I'm going to sell one and then buy one right back. That's a castle. So we took some profits. We could do another one, sell one, buy one. But it's bringing our dollar cost average down now, right? So we have to put our go 4, stop, drop that in there at the break even. And now what we really want to do is we're going to go edit and we want to trail on the ATR. And now we don't want to see, we brought our money down. The ATR is still way up there. So you'd need to, at this point, you just kind of want to sit on your hands and see if that market's not going to fall and come all the way back down into this region here somewhere, even if it takes it a while to come over here. Get a little up and down and through here as it falls and comes back down. But you got your position now. Just hang on to it. If you want to do a little bit of castling, sell one, buy one. Dollar cost average in, pull it right back off again. So that put us up $286. We got $298 sitting out there. It's starting to get weak. Wants to turn around and come back against you. You could just get out and take your profits. And then you'd feel bad if it took off and went to the moon. Or you could just come in here and say, well, I got 4. I'm just going to take 3 of them off. So I buy 3. Change your stop. Put it to 1. All kinds of things you can do once you're in the money. Once you're making money, there's all kinds of things you can do. So there you go. Now you just let that one, that's your Hail Mary. So now you just want that one to go all the way down here. You're going to hang on to it for 10 days. All right, guys, that was a fun trip. Took us a little longer than we thought, but hopefully you had fun. We bought some weed and came over and went crazy on the played Balaam's Ladder. That's what that was. Balaam's Ladder. Land's modification of the Balaam's Ladder, where we trail for entry as opposed to just put limit orders out there. That one works a little bit better for me. All right, guys, I'm going to let you go. Have a good, actually, you know what? I'm not going to see you for about a week. A week from Monday is probably the next time you'll see me. Take a week off and get myself settled, move, and hopefully you'll come back. I know every time I take a week off, I lose a whole bunch of people. You guys forget who I am, but hopefully you guys will come back and we'll see you again in a week. Take care. Have a good holiday, Easter holiday. If you like this one, like and share, subscribe, hit that little recommend thing, do all that kind of YouTube stuff. So that always helps us out here at the YouTube channel. So I appreciate it when you do that. And we will see you guys next time.